Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and as always, the main man of the hour, Mr. AJ Brown. How you doing, AJ?
I'm doing well this week.
Today, we decided to go with the bull bear background because I feel like that's a common story right now. Where once again we had that big sell-off, we've rallied. We're kind of still in that same place, fighting for what we're going to do next. What are your thoughts on where we're at in the overall market right now?
I mean, and especially today, the volume has tapered off. I think folks are going off for their Labor Day holiday. I mean, let's get to the bottom of this. People are going to come back from Labor Day as they do every year. The week after Labor Day tends to be one of those reconciliation weeks, just like the week after the winter holidays. Things start to get, back into a groove. The football season starts, fall starts, people start focusing more on stuff inside instead of outside. So we have to get through today. We have to get through the holiday. Trading resumes on Tuesday. And so, yeah, I'm expecting some sort of reconciliation.
Yeah, so if we pull up the S&P,
Mm-hmm.
we're still pretty close to these all-time highs, and it looks like this week was just we've got some good news. We're going to react. We've got some good news, but we don't like the forecast, so that's bad news. But we're still not breaking out of this zone, and what you're saying is next week after Labor Day, we might start to get some answers one way or another, right?
Yeah, I mean, what we've seen for about the last 10 trading days is what we call kind of a convergence or a consolidation. I mean, you can see that right here. Another thing that we use often, I've got an old school, I mean, this is an old school set of setups. If you guys want to, take your charting packages, your drawing packages, and you want to add some moving averages. So I'm going to add some moving averages, specifically exponential ones. And I'm going to add 3 of them. 1, 2, 3. And I'm going to label them or not label them, set them to the 5, the 10, and the 20, right? The 5, 10, and 20-day EMAs. Now, the scoop behind the 5, 10, and 20, that's called the butterfly pattern. And this is, like I said, we're talking about a 50, maybe even older pattern that people have used to kind of analyze the market. Let me pull up that 10 one more time. I'm going to change these colors so that you can see the difference between the 5, 10, and 20. Here comes the 20. You see, I'm setting these as we go. This is something that people have been using for literally years. Let's use something like that to understand when the market is going to be breaking out. And the reason why they call it a butterfly pattern, not to be confused with the butterfly option strategy that's very popular, is because, as you can see, these exponential moving averages, if I go back a couple of, look at 2 years worth of data, we can find a time. I'm going to pull up, kind of zoom in right here. We can find a time where all 3 of those exponential moving averages fall on top of each other. Sip, we call that a butterfly body because on either side you get these butterfly wings. When you see a butterfly body forming in the 5, 10, and 20-day EMAs, generally what that means is that a breakout is coming. And breakouts are interesting. We can't tell whether, unless you've got some sort of insider information, you don't really know if it's going to break out up or break out down. All you can count on is that it's not going to stay at its certain level. So let me bring us back to now. We don't necessarily have a butterfly body forming, but if we continue to hover at this, 5,600, 5,625 level, if we consider to hover there and these 5, you can see how this 20-day is racing up to catch up with the 5 and the 10. If we start to get one of those butterfly bodies, I'm going to start buckling in for some sort of breakout.
And the catalyst for that could be the rate drops, correct? Because
Could
I know
be.
that there was some chatter this week about, or I think last week when we were actually having our show, about what's going to happen with that, and is that kind of the next, signal that the overall market's looking for?
It could be, but you know what? When you start to get this consolidation around a single price where, there's very little distance between the top and the bottom, it basically means that investors are sitting on their hands waiting for something. And as each day goes by, they start to get antsier and antsier, which means that any sort of like little match thrown into that kind of oily pile of rags, it's like every day that you don't get any sort of movement or answer to whatever, investors are waiting for, you're piling another oily rag into the pile. And finally something, and as that pile of oily rags grows, it doesn't take much of a spark to get that thing to go off, right? And so it could be totally the September meeting of the Fed, which I believe is scheduled for September 18th, but it could be anything else. I mean, we just had earnings on Nvidia. That was an interesting thing. I know we'll talk about that later, but it could be anything, Sip, especially when folks start piling in back from this Labor Day holiday. So I'm watching that consolidation carefully. I've applied my butterfly pattern to see if a butterfly body forms, because that's when I'm going to start, really looking at how I can profit on a potential breakout in the market.
And it seems as if this week's economic news were some of those matches, right? Like I think we got consumer confidence, we got some GDP, and they all seemed to be positive, solid numbers, not one way or another, kind of, continuing to harness this message of a soft landing. So the softer the landing, I think the better likelihood of continued rally through new highs. I mean, versus the alternative.
Maybe, or maybe more sideways choppy like we've been forecasting here. I mean, yeah, we got durable goods orders on Monday. Nothing special there except for the fact that, transportation seems to have gotten a lot of orders during the month of July. Otherwise, everything else, durable goods, is things like your clothes dryer and washer. Bottom line is, yes, in transportation, there was an unexpected uptick in July, but otherwise, durable goods orders have kind of started to slow, which is right in line with what the Fed is trying to do. They're trying to slow the economy, slow inflation. Then you take a look over here. On Tuesday, we got consumer confidence. Interestingly enough, consumer confidence was higher than expected, which is great. That means that the all important consumer is still out there and positive, although there was a sub bit of information with that consumer confidence report about worries about employment. And so that kind of threw some water on the fact that the consumers are excited. Wednesday was kind of a nothing day, except for after market close, we got Nvidia reporting. Thursday, we had GDP numbers. Remember, GDP SIP comes out every month, and they start out with an advanced report, then they revise it, they give you a preliminary report, which is the one that came out this Thursday, and then they revise it again for a final report. This is all for quarter two. So the preliminary numbers came in 0.2% higher than the advanced numbers, saying that quarter two GDP came in at 3%, which is actually quite strong for, trying to slow things down. And then today, we got the all important PCE numbers, the personal income and outlays, which showed that, and this was kind of a positive, although I'm already seeing that the markets maybe digested it and now it's pulling back, but incomes were higher, whereas outlays were as expected. That's investors like that. If the person out there can finally feel like they're getting ahead of prices, and the PCE and the PCE core goods reports came in as expected. I mean, we've been having all of these messages coming from different Fed presidents. One of them completely echoed what Jerome Powell said last week from Jackson Hole, where he said, there's going to be some tightening. It's coming. And another Fed president actually came back and said, yeah, there'll probably be some tightening, but I like a very measured approach. We're talking, only doing a quarter point drop at a time. We're not going to do anything crazy. You and I like to look at, let's see if I can pull it up here. You and I like to look at the futures on that. That's right here. So let's take a look at the September numbers. So last week it was almost like this was here. This right here represents what the market has priced in for a quarter point rate drop, and this is a half point rate drop. And it turns out that this number is getting bigger. This number is getting smaller. In other words, investors are pricing in more like a quarter point rate drop come September, which is interesting because then there's a meeting in the beginning of November. And now we're starting to see, before last week, we saw that it was kind of half and half, whether they thought it was going to be another quarter. This would be another quarter point. So this would be a total of a half point for the year. This would be, we're looking at 0.5 or 0.75 for the year, including the September one. And so it looks like, investors are starting to pile on with having a measured approach, which is a quarter point and a quarter point. But still, interestingly enough, Sip, when we get to December, you still see the majority of investors thinking that there'll be a 1 point rate drop for the year. So that they're still pricing in the fact that they think that there's going to be a half point rate drop. Maybe not in September, but will it be in November? Will it be in December? Or will it be more like I've been saying, where you're not going to get a full point? You're only going to get 3/4 points, right? 3/4 of a point by the end of the year. We're going to have to see, but it's interesting what people are pricing in.
I have a quick question on this graphic, and that's, so you can so let's just go to the November, right? The November are one of these no hike whatsoever, right? So no, that's so
no. In fact, it's not even on the. Sometimes it's on the map, but no. This is having an additional quarter point, which would be a total. If you include the September quarter point, that would be a half point total, right? This is a half point, which would be 3/4 of a point total. And then there's a small percentage, just under 10%, who actually think there'll be, by this time, something like a whole point and 3/4 of a point drop. So, there's nothing over here. In fact, they're pretty much by November guaranteeing that there'll be a quarter point and a half point. It's not even showing up that they won't stop in November. Investors have pretty much priced in 2 quarter point rate hikes, maybe even a half point rate hike by November.
And is the logic there that, hey, once we start, we might as well continue? Or, I mean, because it's been a pretty long time without moving one way or another, like historic, like 18 months. I don't know what the number is, but I've seen some tweets about it. And I almost feel like a quarter point and then they'll wait again. You're like, okay, well, we finally dropped rates, but we need more data. Blah, 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 blah. So,
I mean, it is so interesting, isn't it? In fact, you guys might have noticed, you guys out there in YouTube land, that mortgages have been dropping. The Fed hasn't even taken any action yet with respect to the overnight funding rate, and yet mortgage rates have dropped. It's interesting because it shows that the mortgage rates are not directly related to the overnight funding rate. It really comes down to this sentiment and this belief of what's going to happen. The banks are actually kind of foreshadowing what might happen. You almost wonder, is it the banks leading the Fed or the Fed leading the banks? Because, the banks have already priced in that the Fed's going to have at least a quarter point rate hike, a quarter point rate drop in this September 18th meeting. So it's quite interesting what's happening. In fact, some of the banks are already forecasting that there'll be a half point rate drop at least by November.
And that's this game of investing that we play, right? Every day
It's
we enter the battlefield and we try and figure out what's going to happen next. And we have these tools. And for you and the Trading Trainer team, we've got these amazing options tools.
Yeah.
Uh,
And somebody keeps you got to keep in mind when it comes. Somebody just wrote in, you mean rate reduction? Yes, rate drop. I apologize. I said rate hike, but I meant to say rate drop or rate reduction. The scoop is, these interest rate raises or drops really, somebody was kind of correlating that to how much money is out there. It's not related to how much money is out there. It's related to how expensive it is to borrow money, right? Because if you can borrow money more cheaply, you're going to be more incentivized to do that and buy things on credit, right? And keep that money flowing. So it's how expensive money is. It's not how much money is out there. But I am showing a graph right now, which is this other tool that doesn't get the spotlight that I actually believe it deserves. So that's why we always are throwing the spotlight on it ourselves during our podcast. And this is that quantitative tightening process that the Fed's taking right now to undo the quantitative easing that they did. And I've been somewhat concerned that for like 2 or 3 weeks, they had stopped. But you can see that in the last 2 weeks, they really picked it up again. This is how much money the Fed has basically printed out of thin air and put as an IOU on their accounting books. And now they're basically shredding it, right? They're taking that money back, fulfilling their IOUs. And so you can see that on the Fed's books, they've basically created, at this point, it's down to about 7.13 or 7.14 trillion, not counting what they reported yesterday. It takes about a week for it to show up on this graph. Every Thursday, they report their accounting, but they have gone back to quantitative tightening. Remember, they're trying to get that number down to 5 trillion, which was pre-pandemic levels, so that they're basically reloading that tool of theirs, the money printing tool, because they don't do what other central banks do, which they have made it a point to never go into negative interest rates. So instead, they use this quantitative easing and tightening tool. So I like to pay attention to that, because if they stall on this, it usually means that they're concerned about something. But they've picked up on it, so I guess we're back into the business of quantitative tightening.
Yeah, and we looked at this chart months ago, and from a wider lens, and we were like, "Oh man, that's a lot of ground to make up." But we're making up that ground, so that's great to see from just like a higher level ideology on these this tool. So it seems like we could hit that 5 mark at some point in the future if the economy doesn't come crashing or someone needs some sort of saving. So that's great to see.
Yeah, remember when those banks, those mid-sized banks that were no longer covered by some of the federal regulations started to fail, and we saw them go right back to quantitative easing? That's this little blip right here. But then they've totally sold off. But you can see that it's slowing. You can see right here that this curve looks like it's slowing. they had said that it would take till about 2027, 2028 to get down to that target of $5 trillion. So, they've got 2 trillion, they've gone about 2 trillion to date. So they started back here. When's this? About May of 2022. And they've been hitting it for about 2 years now. And so they're down by 2 trillion. Maybe 2 more years, they'll be down at the 5 trillion mark. We'll see. I would love to see that the Fed has, back to pre-recession, pre-2008 levels where it was under $1 trillion. But that's not the current Fed's target. When he's asked about this, he's talking the 5 trillion number. That's even a little bit higher than was during the whole Obama presidency, where they kept it at about 4.5 trillion. We'll see, but that's just a parameter when I'm looking at the overall health of the U.S. economy. I do pay attention to this, and I think so should other folks. This is more directly related than even the interest rate discussion.
And with that, what we'll do now is we'll give people an opportunity to jump in the workshop that we have, the daily workshop, because I know you do a great job of taking this information, the news stories, the technicals, and applying some pretty cool strategies to almost build a system that pays you dividend like a monthly paycheck, which is the awesome concept behind a lot of the strategies that you and the team at Trading Trainer are working on and evolving. So the link to that is in the chat. We're going to take a break. We still got AJ's pick of the week. We've got our speed round. And we're going to be trying to figure out some ways to, earn some profit given where the market is. And I believe time is our friend here. So we're going to look at some strategies on how to take advantage of that. Sit tight. If you have any questions, if you have any tickers you want AJ to run through, feel free to throw them in the chat. We're going to take a break. We'll be back in a jiffy. Sit tight.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So this week, besides some of the economic news that came out, we still had some earnings. And I know last quarter, the big earnings story was NVIDIA. Like the entire market almost waited like 2 or 3 days for NVIDIA to release their earnings. And somehow that was supposed to tell the story for the tech sector. And it led these indexes to new highs. And we had NVIDIA earnings this week. And I think the world was expecting something similar, and when the numbers came out, the numbers looked really good, but the stock got crushed. And let me just pull up this. I have a tweet on my end that kind of digs into this, and I saw this, AJ, and this to me is what scares me about earnings. I know whenever you're doing some of your analysis, you're like, oh, earnings is coming up, maybe we should avoid this because of all this back and forth, and you don't know what to expect. And so here's the top line numbers. NVIDIA better than expected. Revenue up 3.2 versus 3.1. 50 billion in share buybacks, and the stock is still down 7%. So I guess the question here, AJ, is how, like, as an investor, is it good for us to avoid these earnings because so many things are at play and so much information is being digested in such a short period of time, and or you have a good option strategy to kind of take advantage of this volatility as well? So what are your thoughts on what happened with NVIDIA, and then maybe tell us how we as investors should, use earnings and play them essentially?
Well, okay, let's back it up a little bit here. So we knew something was amiss 3 months ago, so a quarter ago, when we were looking at the S&P 500. So I'm pulling up the S&P 500 chart. We saw this huge run up, right? But when we looked at, so the S&P 500 is a weighted index. So the bigger companies get more influence on the S&P 500 price. But when we do the S&P 500 equal weighting, where they take each of those 500 companies and give it an equal share, we saw that during the same amount of time, this S&P 500 equal weighting was going sideways. So that means that we could then look at which companies get the biggest amount of weighting in the S&P 500. And I don't mean WAITING, like sitting, being patient. I'm talking about the weight, how much influence the S&P 500 gets from each individual stock component. And we looked at the biggest ones, and it was Apple, Microsoft, and NVIDIA, right? Those were the three companies getting a heck ton of investment while the rest of the companies were sitting sidelines. Then we went a little bit further, and we went back to the S&P 500, realizing that it was being influenced by pretty much these three tech companies, maybe a little bit by companies like Amazon, Google, Facebook, maybe not so much Tesla. These are the FANG stocks, right? We noticed that there was a lot, like if I bring in my drawings here, I'm going to bring in my drawing right here. We noticed starting May 30th that we were getting to highs that didn't make sense, right? We didn't get enough pullback in order to have those same big money investors bringing the market to highs. So we had been, you can go back to previous shows of our SIP, and you could see that we were like, where is this money coming from? We saw a lot of money coming in from like crypto, and already, the folks that were, interested in crypto like 3 or 4 years ago, we know that they're almost like new, fickle, maybe not as much financially educated or investor educated type folks. They're more looking for like quick wins. So this whole NVIDIA story, the top line of NVIDIA was really pushed over the edge by some investors that were looking for like overnight wins. They were looking for quick wins. The bottom line is NVIDIA had earnings this past Thursday. Yes, they beat expectations. And yes, they totally raised guidance, which means they expect next earnings to even be off the charts. But there was some stretch goals that they didn't hit, right? And so these get rich quick investors are all of a sudden like, I'm not getting rich quick. And they started to pull their money out of NVIDIA. And we saw that all throughout the week, as they want to get rich quick, these folks. And if you look at NVIDIA, I pulled NVIDIA up, yes, off of their top here. You can see I actually have a reversal signal from my indicator. Yeah, they pulled back, but you know what? This is like chump change for NVIDIA. This is those few investors that had pushed it all the way to those highs, jumping ship. But it's good for anybody who's an NVIDIA investor, because it's leaving us with, those type of investors that are going to be interested in NVIDIA for the long haul. They're not in there just to get rich quick. You'll notice, by the way, NVIDIA is starting to trade sideways, is what I would expect it to do as it's pursuing AI in the long term. And this makes NVIDIA, especially after they did that 10-to-1 split that brought NVIDIA's price down, it makes it a great target for us option traders who like range-bound, candidates that start to pull back from being in the daily news. I could see in the not too distant future wanting to sell premium on NVIDIA, SIP.
And you mentioned this before we started the show today, and that's I mean, Nvidia earnings, I think, were on Wednesday. Today is Friday. Labor Day is
Mm.
Monday. You basically said, oh, maybe next week, once the dust settles, the smart money will come in and start to buy off of this pullback. And to me, it's always
I
like,
could see
man,
some I could totally see some bargain buying from institutions on Nvidia.
and it's like when these earnings like reports come out, and I don't know if anybody watching, if you've ever seen the trade, it's like havoc. It literally is like being in a, like on the trading floor with the way the prices, and it's just like crazy to me that that's a smart way to invest. It seems as if it's not. It seems as if earnings should come out. You should give it a day or two, let all the wildness digest, and then kind of pick your patterns, right? Other than your volatility play, right?
Mm. Even the volatility play, because you have to, play there's a strategy that we use if we expect, the volatility to rise and then drop, but it be kind of a no brainer, meaning that, the stock actually isn't affected by earnings. And then we have another volatility play, which actually you expect the symbol to move as well as this volatility crush. So the scoop is you know when in doubt, when in doubt, go into all cash, let the storm pass, and then if you want to jump back into the position, where you left off with whatever, modicum of change happened after the storm passes, that's what you do, right? You take the protective model. That's our motto, is don't put yourself in unnecessary risk, right? That's the bottom line.
And if you're interested, anyone viewing, in seeing some of those volatility crush plays, I believe we have a few video examples on the YouTube page. So just head on over there. I know we've discussed some potentials in the past, some before and after. So head on over there, check that out.
We had a lot of companies this week, still earnings season, right? We had like all of the retailers, like I believe Nordstrom did this week. Kohl's was out. So, there's all these plays, and there, although we have a season, there's always earnings peppered throughout the year. So you could use this strategy, if that gets your goat, you could totally
Yeah.
use that.
Well, today's the last trading day of August. September's starting next week. Everyone's back
Yep.
to school. Like, I feel like the summer's winding down. We're getting, families are getting back into the grooves, and
It's getting darker earlier.
this is
I
true.
noticed
This is
that.
true.
I noticed
Uh,
that.
although we're supposed to be hitting 100 degrees next week. I saw on
Oh,
our,
that's funny.
which is
Yesterday
crazy.
and the day before here on the East Coast, we hit close to 100 degrees, at least with the humidity. And then something happened yesterday and the skies opened up and we got like crazy hail and crazy stuff like that. And now it's 70 degrees. So cool. 70, but it's 70 and swampy. Ugh.
Global warming in the year 2024. You take
Climate
it
change.
day
Yeah.
day by day.
Yeah.
All right, cool. Let's get into some specific opportunities, some specific plays. I'm
Yeah.
interested to learn about your pick of the week. So let's dig right into it.
Let's do it.
Name of this company is Applied Octo Electronics, ticker symbol AAOI. AJ, what's the scoop with this one?
Uh-huh.
Sounds very exotic.
Yeah, this is a I love boring stocks, right? As somebody who's called the most disciplined options trader, and again, I think my peers totally say behind my back that I'm the laziest options trader. I like to think of myself as the most efficient one because I follow my rules and I'm an end of day trader, and so I'm all about the destination. I don't care about the journey so much as I care about, getting those ongoing incomes. So I'm going to find the most boring stocks that, ideally are going to be around. And this is a fiber optic company, right? They've got some fiber optic switches and lasers, but mostly they provision big fiber optic systems. And it's the backbone of our internet, at least here in the States, but pretty much all over the world. And so, as much as it looks like this company is trying to figure out where they fit in the marketplace, they're not going anywhere. We only, especially as AI goes, you're going to need more and more infrastructure. So I'm all about this company, and it looks like, first of all, I like the price that they're trading at. Right, they're trading at about the $10 range. They're above being a penny stock, but they're super affordable for even the most beginning options trader. And it looks like I want to leg in on a short position. So what I'm thinking of is I'm looking out somewhere between $11 and $12 here. So I'm looking for a top to be found, and I can use my fast MACD indicator. If you go to, I believe you've put a link into the website, into the chat, where people can go download my indicator, or you can just lay on a fast MACD indicator. So you're going to use the 6, 19, and 3. If you use my indicator, I put in an additional amount of configurability. I allow you to pick what sort of price the MACD is calculated on. By default, the MACD is calculated on close price of every bar, but I actually have found that using the volume weighted average price gives me a more solid and validated signal. And in my indicator, I'll show you guys just because I'm so proud of it. This is my indicator. It's called the confirming MACD here. You can see I can pull down. I could use closing price, but I can also use, for instance, if I'm interested in historical volatility, I can use high-low close divided by 3. And there's my darling volume weighted average price. And so that's just kind of a cool thing if you want to go and get my free indicators. I'm waiting for my fast MACD to tell me that a top has been found. That would be an end of day signal. I'd look for follow through on the trading day. If I got that follow through, listen, I'm either going to short some of this, and I'll short it in lots of 100 shares, because then I'll be able to write put options on it in the future. Or if I don't necessarily want to do any shorting, maybe I have a cash account. I don't have a margin account. You can't short if you don't have a margin account. If I have a cash account, I have an alternative. I could go and buy some of the March 2025, $20 puts. It's just barely at that trading at parity definition that I like for my back month. And in that case, I'd be buying these suckers instead of shorting. And so I could do that in a cash account. Either one of those positions, whether you short the stock or you buy that put option that I suggested, will make money as AAOI goes down. And then what I'm expecting it to do based on the patterns I'm seeing is somewhere around $7, $8. I'm expecting it to reverse back up. And when it does that, I'll be ready. I'll be ready to sell some put premium. So sell some near term at the money puts. And I'll buy some 3 to 6 month out calls, probably with a strike price around 10. I believe it's 10. I believe they're going every $2.50. All to say, when I get this top signal, I'm going to set myself up for future income trades. And to do that, I'm either going to short AAOI or I'm going to buy that back month put option. I think this is a great pattern, great symbol.
And like you mentioned, the link to the indicators is in the chat. We've got it down there in the scroll bar. And, you could always just wait for that confirmation to kind of pull the trigger, which has been pretty accurate in a lot of our examples. So definitely a helpful tool to get you some answers and help you pull the trigger whichever way you're looking. So the details of some of the ideas behind that, we've also thrown that in the chat. So, AJ's pick of the week, Applied Optoelectronics, ticker symbol AAOI. All right, we've got some pretty cool speed round names, AJ. Let's go ahead and
do it.
run through them, see what your take is. We'll start on the In the West, this is Eric in Phoenix, Arizona, interested in ON Semiconductors, ticker symbol ON.
I mean, here's the scoop on ON Semiconductor. Phoenix, Scottsdale, that whole area, Mesa, is like semiconductor, central. They've been semiconductor central for the last 30 years. A lot of plants have moved there to make semiconductors, and especially with the new CHIPS Act and the infrastructure bill, which has even more emphasis. A lot of companies are moving back to the Phoenix area, and chips are starting to get, come up to speed. So ON Semiconductor is one of those companies there. I've looked at this before. I can tell because I got a line here, and this line actually has held out as a level of support. And it looks like we've got a level of resistance about $10 higher. That's good. Let me go ahead and duplicate that so I can see what I'm doing here. Yeah, this looks like a great pattern. It looks like I can do something with my fast MACD, or I could do something with some trends to determine if this is a good, basically what I'm looking for is a clear top to be found. I got a signal over here. When I get a signal, one of my follow-through rules is that I need to be trading through the signal days low. So I can see for a fact that I didn't close below that low any on the subsequent days. And then I got this signal that basically reversed. And what this light blue arrow is telling us is, hey, I know you've been looking for follow through on each day that followed that signal. Take a break from looking at daily follow through until I give you another purple signal. So it's going for another top, but it looks like it's meandering here at that 78.50, 78.75 number. So I'm with you. This is Eric. Eric, I think that we wait, right? We don't shoot until we see the whites of their eyes, which means I need to see a new end of day signal followed by that all important trading day follow through before I do exactly what I think you want to do, which is either short some of this ON Semiconductor, and I would again short it in lots of 100 because options are sold in lots of 100. So if I wanted to sell in the future put options, I need to have 100 shares of stock shorted in order to cover that. And again, there's always an alternative. If we take a look at the option chain and we go about 8 months out, so we can look at March and we go deep in the money on the put side. I like to take extrinsic divided by mark. Yeah, probably this $100 call. $100 put. I'm probably going to get a message here in the chat that says, did you mean call or put? Put. I can see taking that. It's only $24.65 versus $77.50. Taking one of those puts and using that as a substitute. You get a couple of benefits when you use a back month put option instead of shorting the stock. Number one benefit is you can do it at a cheaper price. We see it's about a third of the price. Number two benefit is you take something that would otherwise require a margin account and you do it in a cash account. So a couple of benefits there. So yeah, I like it. Bottom line is I like it, but we're not going to do any sort of actions until we get the signal and get the trading day follow through.
Yeah, today's Warren Buffett's birthday. He turned 94, and I keep seeing all these quotes about patience, and I think you reiterated that here is you want to wait a little bit and be patient until you get.
It might not be long, but you want to wait for your signals. Don't jump the gun. Also, this is a little bit on the expensive side, so make sure you do your position sizing and risk assessment accordingly because you're probably going to need. Again, depending on where you put, plan to buy your protective options and or put your stop losses, you're probably going to need like a 50 or $100,000 portfolio to be able to trade this, create an income off of it. But if you do have that size portfolio, you could create a pretty nice income off of this one.
Yeah, and you want to be more confident than not when
Mhm.
you're up in these numbers. So thank you for that, Eric. Let's move on to our second name. We're gonna head down to Dallas, Texas. This is Beth, interested in Darling Ingredients, ticker
Oh,
symbol
yeah.
DAR. Boring, but we like boring, right?
Yeah, yeah, Darling puts a lot of ingredients not only into food, but also into feed for animals. So, we've been seeing money leaving those high-flying tech stocks and those, the FANG stocks and kind of getting distributed, especially among defensive plays. Although in this last week, I haven't seen gold go any higher. So, on a side note, maybe some of that has equaled out. But yeah, Darling looks like it's one of those candidates that has been seeing that money come back to it after leaving some of those, get rich quick stocks that weren't going to actually make people rich quickly. So say that a couple times. So yeah, um, here's my thought on Darling. I'm not going to count it as a premium trade. I'm looking at it and I'm actually seeing that after it bottomed out, when all the money was being drained from these solid plays into those tech stocks, and now slowly money's been coming back, this is a trend follower. And I would actually try to trade this thing almost like a swing trade, right? What I like to do if I'm actually looking at swing trades is, number one, I like to establish a trend, and I'm pretty sure that we've got an established trend. It's moving approximately $2 every month or so, maybe $1.50 every month. So this thing is ascending. What you want to look for is when you have like an overbought, oversold indicator, like Larry Williams. He's got his Williams percent R. You can use fast and slow stochastics. You actually want to see these things become pretty much oversold, right? Basically showing a little bit of a pullback. And then before you don't just jump into the trade on that trigger, right? That shows that, the stock is oversold. Wait until you get some sort of, slightly lagging indicator. I don't care if it's a MACD crossing or a moving average crossing, a close above a moving average. I'm not, even a shaken oscillator crossing, but get that lagging indicator to kick in and then trade that swing until you either get the reverse signal or you get some sort of trailing stop to kick in. But this to me would be perfect swing trade, and you just have to wait for the setup. And then if you want to use a single leg option for leverage on that directional move, I mean that's totally within my wheelhouse. But I don't think until you establish, and I keep telling my program participants this, until you establish at least 2 tests of support and 2 tests of resistance, you can't really say something is range bound, and therefore you want to go ahead and start the process of, trading it sideways with a premium trade. So this is for now going to be a swing trade in my opinion.
Yeah, that seems to make a lot of sense, especially with the trend line you just drew there. So thank you for that, Beth. I'm
Thanks,
looking
Beth.
forward to this. I'm looking forward to this third name because I remember when we were looking at this months ago, if not years ago. So Ben from Miami,
Mhm.
Florida wants to know, do we have anything to look into in Carnival Cruise Line, ticker symbol CCL?
Well, cruising season tends to pick up actually in the winter. People love to go on cruises in the winter to take kind of a break. Um, yeah, this is neat, right? Um, is it a premium trade? Is it something that we can count on? to be in between two numbers. Let me go back a little bit here because I see moments. I mean, yeah, when you look at the bigger picture, Carnival is trading between about $14 and $20. But when you zoom in on like a monthly basis, if I was to have, say, for instance, jumped in on Carnival down here at $14 and a half dollars, even $15, and this thing appreciated all the way up to $19, you got to think to yourself that you've made about $4 on an initial investment of $15. If I pull up my little calculator up on the screen here, my calculator showed up on one of my other screens. Let me pull it over here. $4 on a $15 initial investment, you're talking about a 25% ROI. You almost want to take advantage, don't get so caught up in the fact that you want to do a premium trade. The scoop is if it appreciates by 25, 30, 40, 50%, in this case, more like 25, 30%, maybe it's time for you to treat it as a directional trade and just get out. You know what I'm saying? And then you take this signal, and if you shorted it here, then the bear jumped out the window and you shorted it at 18 and now it's at 14. Don't worry about selling put premium. These are directional, these are called intra-channel directional trades. You just take advantage. Sometimes when the gains have been so much, you don't worry about selling premium. You just take the money and run. So here we are. Are we forming a top? Here's what I got a couple of different choose your own adventures here. If we actually form a top here at 17 and don't reach back up to 19 and a half, I could see why you might want to short some Carnival Cruise Line, because then it shows that we've got a tested line of resistance at 17, and we've already tested our support down at 14. That's more digestible. So you short a little bit of Cruise Line if you get a top signal here, and then when it dips down to 14, you go ahead and sell some put premium. If it goes lower than 14, if it goes to 12, then again, just close the position, take the directional profits and run. So that's the first thing we'll do. The first thing is if we actually get signals and follow through that we found a top at this level, I can see doing some shorting. If we go higher, well, I guess we're just going to wait for this next top, no matter where it is. But if we get up here and we decide to short it, I'd be definitely more interested in some sort of directional play where I just look for when am I going to buy to close it versus here at the 17. So not the easiest candidate to trade an option strategy on because it's not being committal to one pattern or another. I think there's lower hanging fruits where the patterns are crystal clear. You could probably do something. Again, I would let the signals dictate what I do next. If I get a signal at 17, I might short and sell premium. If I get a signal at 19, I might short, look for a directional trade.
It seems like it's got to figure itself out the next couple of
absolutely
sessions. All right,
I think there's lower hanging fruit, more trades that you can get, make decisions on that you can get more consistent results from than Carnival Cruise Lines right now.
Yeah. All right. Thank you for that, Ben. Thank you, AJ, for the speed round breakdown. Yeah, we're getting near the end of the show here, AJ.
End of the summer doldrums.
Yeah, today, right? Friday, heading into a Labor Day weekend, right?
Yeah.
Like we should expect low volumes.
Wasn't so doldrumy though, but this week it's been low volumes. I think people have basically checked out, gone on Labor Day vacations early. A lot of people are taking road trips. The airports are completely inundated. People are just checked out until next week.
Well, I'm not heading anywhere, and that's okay with me. I'll be enjoying sunny California,
Mhm.
and yeah, we'll get in tune with what's happening next week. I think next week's show we'll have some more answers as to who's winning the battle between the bull and the bear.
Mhm.
And yeah, we'll be happy to head back and report. I am pulling up your chart here. You want to do some final analysis here?
I mean, again, like I said in the beginning of the show, I'm waiting to see if this consolidation plays out or if we actually get some sort of reversal signal and start heading back down. We're in sideways choppy territory. You guys know, I know some of you are part of our program. If you've been looking at our beta picks screener, right? As part of our program, we give you candidates that are perfect for selling premium at. And you know, our beta pick screener has been growing, which means there's a lot of sideways chop out there. I mean, last I looked, that watch list was on multiple pages. So, you know, the market's in sideways choppy. Like I've been saying for the last months, it's forecasting out to be sideways choppy well into 2025. This is a premium seller's dream. You know, I would be doing all sorts of homework on these candidates if I were you for the month of September. It looks like it's going to be a fun month.
Yeah, and once again, if you want to get a little bit more detail on how to do that, the link to AJ's free daily workshop is in the chat, breaking down that premium selling strategy, using time to our advantage. So yeah, dig in, head on over there, sign up. If you want to learn more about what AJ was just talking about with the beta list and the program, head on over to Trading Trainer. If you have a question, hit the contact button, reach out. Someone will help you out, give you some answers. Head on over to the webinar. I know there's some follow-ups from that'll give you some information on how to become a member. Otherwise, thank you everybody for tuning in. Please show some love, hit that like, hit that follow, hit that subscribe
Tell
button.
your friends.
Tell your friends, bring some ideas back to the drawing board. Let's, look at some opportunities. AJ, thank you again for your time today and your diligent analysis on some of these wonderful names that we've got out here in the sphere. And yeah, wishing everybody a happy Labor Day weekend, and you as well, AJ, you and the family. And
Yep.
we'll catch everybody next week.
Take care, everybody.
See you guys.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content